Okay, so now let's talk a little bit about Redfin's most recent earnings numbers that we got back at the beginning of May. Tim, we've had some time to digest these since they've come out. What popped out to you most from those presentations, just from a numbers point of view? We'll dive into Redfin Direct in a little bit more in a second.
So revenue was up over 38%, which is a great number. It's a little bit skewed, and it's important to point out that a lot of that outsized growth is from other services. So it's from mortgage, it's from title, and most specifically from Redfin Now. So Redfin Now, and let's just, if we can, take a quick step back. Basically what Redfin Now is it's house flipping. I know they hate us using that term, but the house flipping market where Chip and Joanna Gaines go in and they buy a house and then they fix it up and then they sell it and they make a nice profit. That has been a cottage industry for a long time, and we've seen it on reality television for years. But now you have bigger brands like Redfin using data, coming in and saying, you know what, we could make X offers on these types of homes. And they're using it from just years of sales data, decades of sales data. And they're using that to make appropriate bids at the right homes, pulling that inventory onto their balance sheet, and then moving it within a year. That's roughly what they're trying to do. I think within a few months, quite frankly. So it's still ramping up. They have a limit on how much they can spend, but Redfin Now was up to 21.4 million versus 3.1 million last year. So, I mean, it's up over, roughly 7x. That's an incredible gain. The mortgage and title services were up 59%. So the core brokerage business was up 15%. That's good. It's not amazing, but it's good. I mean, it was kind of a wobbly market last year. And so, to know that they were up during that period and that it accelerated sequentially is a pretty good sign. It shows that Redfin does have a pretty loyal base of customers that they can pull from. And that's a good thing. But a lot of what's happening here is this is a business that's in transition. And as it transitions into these higher growth businesses and pulling in more of the transaction to serve customers in a bigger way, I think that's going to be very good for them over the long term, but they're still building that, Nick.
Yeah, you talked about the brokerage revenue. It was up in spite of a real estate market that contracted somewhat in 2017, and to see that continue to trend up going into the first quarter of this year is positive. You also, when it comes to that growth, management talked about they'd been a little bit hesitant to hire a large number of agents in the 2018 as there was some weakness in the real estate market. So as we see things solidify underneath them, you might see that growth rate tick up a little bit. You saw their loss expand a little bit in this quarter versus a year ago, a $67 million loss versus $36 million in the year ago quarter. However, that's driven in large part, you mentioned Redfin Now, what some investments they're making there, but also in the first part of this year, they really started ramping up a national advertising campaign. They had a Super Bowl ad. I'm talking about, the CEO was talking about 2019 is going to be the story of what happens to Redfin when the entire country is aware of our customer value proposition. And they've been really rolling out advertising to make sure as many people as possible are aware of that. Tim, as you see them, kind of going after a broad mass audience, do you think Redfin is really starting to hit that turning point where they're hitting scale and can really start to press on these things in a large, broad way?
Well, they're building out tools to help them do that. It's uncomfortable. They're stretching their agents a little bit, which is why you saw some shrinking in the. We talked about this before the show, Nick. Like some shrinking in the gross margins. That's because they've got some agents that are learning how to take on a bigger workload using their tools. So they're kind of figuring out exactly what the right mix is. So they're not there yet. And I think it would be a mistake to say they're there, but they're getting there. They're getting much closer. And I do think that this is, it's absolutely right. One of the things that could make Redfin, a massive winner from here is if it moves from its traditional domain on the coasts, both East and West Coast, into the interior. There's it's a fascinating stat. On U-Haul, the cost of renting a U-Haul to go from California to Texas is much higher, more than double the cost of renting a U-Haul to go from Dallas to Los Angeles. I think that's fascinating. It means that there's an internal migration. And so Redfin is doing this at a very interesting time. So as they expand into new markets and they get people aware of them, they're going to have a chance to grab some of that low-hanging fruit in the markets when they show up and say, hey, we're here and you've heard of us because we had a Super Bowl ad. We have YouTube ads. We're on social media. We're advertising in a bigger way. We're doing brand advertising. So they're going to have a chance to get some of that low-hanging fruit. I think that's good. But they are going to have to build better tools. They're going to have to do it quickly. And what I mean by that is they're going to have to be able to, for example, instead of having an agent schedule, your appointment to see a home, you're going to go into an online calendar and do that. Or you'll get an email that says, choose your time, and they'll automate some of that. So they do need to make agents more efficient, and they recognize that. But they're working on fixing that problem. And as they do, I think they will scale up very well.
Yeah, I think when you're looking at their scale, there's always going to be some role for that touch of an agent, and the need to increase, that labor pool is going to put a cap on how quickly they can just ramp up growth. There's always going to be some moderation to that growth, driven by the people you have to bring in. You have to have those relationships and touch to at least a certain part of the market.